Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to follow up on particularly the ES and what we were teaching in yesterday's training webinar for MTPredictor customers. For this I'd like to start with our daily chart of the ES, because this is where we sort of started our analysis yesterday. First of all, you'll see that we had a lovely DP sell that basically nailed the very high of the day back there on... what day was that? That was the 19th of September, so we nailed that high absolutely perfectly. So let me just first place our analysis on there, and this is what we've been showing in our analysis for quite a while, is that we had our sell and we came down into our initial target there, and what we said is if this target was breached and we were anticipating that it would be breached, I did a post on our forum showing that as well, is that the market was likely to decline, but it was likely to decline into the DP from this prior pivot low. Again, this has been on our chart for a long time, and also has been talked about for a very long time as well. And as you can see, this is exactly what happened yesterday. The market came down and reached our decision point target there. So our daily analysis has basically been absolutely spot on over the last excuse me, over the last few weeks. So what does that mean for our day trading yesterday? Well, if we go down to our 3-minute chart, what we were looking at was, because the market had not reached our daily DP support, you can see it down here, we were anticipating that the decline was going to carry on and the large degree trend was going to be down. Actually, first what I'll do is go to the 15-minute chart, because this is what we look at for our support and resistance areas. So yesterday we had a DP off this prior pivot here, and as you can see, the market breached this DP early in the day and carried on down, rallied back up and then carried on down. But because it had breached the DP here, we actually said that the large degree trend was down, and actually at the time yesterday we did say that it would probably go for and hunt this daily DP support zone, and that's where the decline happened later in the day. So what would that mean for your day trading yesterday? Well, on the 3-minute chart remember, we're looking for sell setups because we were looking for the trend to be down, so we would not have looked at these buy setups even though the STF was black later in the day. We'd have had an attempt at a short trade here on the 3-minute chart, and as you can see, that did reach the 100% initial risk level, but because you were confident in the large degree trend, you'd have probably left your stop at your initial target, which was 98.25, and therefore probably have been stopped out from -1 hour loss. All professional traders know that losing trades can and do happen. The trick is keeping the loss small at just 1 hour. Later in the day on the 3-minute chart there weren't any other setups. However, this is why we encourage you to use the market analyzer in NinjaTrader to then be able to scan multiple time frames to see whether there are any other setups on other time frames. The other time frame we look at is the 5-minute. So let's go and look at the 5-minute chart, and lo and behold, there was a lovely sell setup which was at pretty much the high of the day. If I look at that, pretty much the high of the day. That was our 3-minute sell there, which we know was stopped out from -1 hour loss. So let's see what the analysis on this would have been. Short 1 contract coming down into here, into the first target there for a plus 4.8 hour profit. So even at the first target, this would have been a profit of 4.8 times greater than the -1 hour loss earlier, therefore making money overall. STF was red, confirming the downtrend as well. And as you can see, that it's quite easy to see the downtrend because we'd breached the 15-minute support level, and then this larger degree daily support level wasn't there, so that's why we were anticipating the decline. However, I'd like to look at this in a bit more detail for the more advanced or more experienced users among you, and I want to look at particularly this bar here. This bar here is the bar that made new lows below the previous low here. So I'm looking at the bar at 1535. Now this was highlighted in our VSA indicator down here as a red bar. Now normally we use this for a volume spike analysis for a reversal. In other words, when there's a high volume, we then look for support to come in, and then we look for the very next bar to see whether the market does indeed confirm the support by reversing. In other words, was the high volume on this bar selling or buying? Normally, if it's a down bar, the next bar then fails to follow through and reverses, it's normally buying. However, this is the other side of the coin. In other words, you can see that the high of this bar, which is the bar after us, the 1540 bar, was never taken out. In fact, we never actually got a blue buy bar till we're actually making new lows. So what you could have done with this is used a 1 bar trailing stop to keep trailing your current short position down at the bar highs to take advantage as the market was going down. The reason being is that because this the bar after the high volume bar, which was this 1540 bar, was not taken out to the long side, therefore you knew that the selling in this initial bar, which was the 1535 bar, was actually truly selling. It was indeed selling because the market failed to reverse its support. So this is a great example of using our VSA setup, but actually for a trend continuation confirmation. If you're using our trade module and you're using NinjaTrader, what you can do is just click on this bar button down on the right hand side here, and that will then automatically adjust your stop at the 1 tick above the bar highs if you're short. So what would that mean? Just pull this back a bit so I can drag the market down. Well, it means that the stop would have been progressed, and you'd have been stopped out at about there, which means you'd have turned your profit into approximately 7.5R, or in other words 7.5 times greater than the initial risk. And looking at this, it would have actually resulted you have been short from pretty much the bar of the high of the day, pretty much. I mean, there was a high there which actually double topped, but you would have been short from the bar of pretty much the high of the day to capture the biggest decline, and then you'd been taking profits pretty much at the low of the day at the bottom there. If you've been trailing with your ATR stop, perhaps you'd have used that as a trend management strategy, because the ATR stop or the STF went strong here. You'd have actually held it right into close, which would have been a lovely 8.4R profit. But I'm not going to show that. I'm going to show the slightly less profit of 7.5R here. So as you can see, a very good day for MTPredictor yesterday, but it was a good day set up by our larger degree analysis. In other words, this is why we're talking about in our training webinar about these levels on our daily chart and our daily analysis, which indicated the market was likely to fall. As you can see, it has done that absolutely perfectly. And then the initial confirmation with that was again on our 15-minute chart here, where we'd breached our 15-minute support, which again indicated the large degree trend to be down, and therefore you'd be looking for sell setups. The best of these came on the 5-minute chart, and there you can see the automatic setup there. So a very, very good day for MTPredictor yesterday, and as a result a nice 7.5R profit on the ES yesterday.